Rewrite history. A spectacular turnaround of the damn company is on the horizon. Disney is slowly making its way back into the limelight after very good quarterly results. How are their streaming platform, park profits, or cinema sales looking? We can already reveal that the company has set several world records in its business this year. What they were, what numbers the company has released, and if it's really becoming an interesting stock again, we'll take a look today. Hi investors, this is Milan from 𝗕𝗂𝗶𝗀. None of the information in this video is investment recommendation. Always do your own detailed analysis. Disney on Thursday reported fiscal fourth quarter results that narrowly beat analysts' estimates as streaming growth helped its entertainment segment. The growth and profitability of streaming, combined with the summer blockbuster in theaters, In Your Head, and other theme park investments, comes at a time when the media industry is in turmoil. Disney is restructuring its business under the leadership of incoming CEO Bob Iger, who is putting the company in order before handing it over to his successor in early 2026, highlighting the significant progress Disney has made over the past year and saying it is confident in the long-term growth prospects of the business. The company's management on Thursday issued an outlook for 2025, 2026, and 2027. During fiscal 2025, Disney expects single-digit growth in adjusted earnings compared to the previous fiscal year. In fiscal years 2026 and 2027, the company expects double-digit growth in adjusted earnings per share. Disney shares rose more than 9% during early trading following the results. Earnings per share were $1.14 versus expectations of $1.10 and revenue of $22.57 billion versus expectations of $22.45 billion. Disney's net income increased to $460 million from $264 million in the same quarter last year. Disney's total revenue increased 6% to USD 22.57 billion compared to the same quarter last fiscal. Total segment operating income increased 23% to $3.66 billion compared to the same period in fiscal 2023. Revenue from the entertainment segment, which includes traditional TV networks, direct-to-consumer streaming and movies, increased 14% year-over-year to $10.83 billion after a hot summer at the box office. It's nice to see from these numbers how important it is to regularly monitor the quarterly results of all the companies in your portfolio, because even companies this big, let alone small ones, can go through major changes in a few quarters like Disney is going through right now. Many investors have already turned their backs on the company, but 𝗕𝗂𝗶𝗀 Black members knew exactly where Disney stood, thanks to unparalleled data and analysis. Disney Pixar's Inside Out 2 became the highest-grossing animated film of all time this summer, surpassing Disney's Frozen 2 in sales. Meanwhile, its Deadpool and Wolverine became the highest-grossing R-rated film of all time, surpassing Warner Bros.' Joker. Those films brought the entertainment segment a profit of $316 million in one quarter. Overall, the segment posted a profit of nearly $1.1 billion. Disney has become the first movie studio to surpass $4 billion in worldwide theatrical revenue in 2024, executives said in a statement Thursday, adding that they are encouraged by the momentum that will be seen in the holiday season with the upcoming premieres of Moana 2 and Mufasa: The Lion King. 5 years since the launch of Disney+, the streaming service has managed to deal with a $4 billion annual loss that only hit in fiscal year 2022, and now it's finally profitable. Disney's combined streaming business, which includes Disney+, Hulu, and ESPN+, posted an operating profit of $321 million for the September period compared to a loss of $387 million in the same period last year. In a press release, company executives said they believe streaming will be a significant growth area for Disney. Disney also joined its peers, including Warner Bros. Discovery, Netflix, Comcast, and Paramount Global, which added streaming subscribers in the latest quarter. The number of subscribers to Disney Plus Core grew by 4.4 million. Management said that more than half of new US Disney Plus subscribers choose the cheaper, ad-supported tier. In the fourth fiscal quarter, Disney's streaming revenue grew 14%, driven by Disney Plus. Revenues for Disney's sports segment, which is primarily comprised of ESPN, were unchanged. ESPN's earnings decreased 6% due in part to higher programming costs associated with the rights to American college football, as well as fewer cable solutions customers. In Disney's Experiences segment, which includes theme parks as well, revenues rose 1% to $8.24 billion. Recently, theme parks, particularly in the United States, have seen a slowdown following a sharp increase in attendance following the end of the pandemic. The companies that operate such parks have warned that this downturn will carry over into future quarters. Comcast recently reported that its revenues from Universal theme parks declined in the most recent quarter due to lower attendance. Disney's Experiences segment is expected to record 6% to 8% earnings growth in the upcoming fiscal year compared to the prior year. Disney noted that it will incur a loss of $130 million in the first fiscal quarter due to the impact of Hurricanes Helene and Milton, as well as a $90 million impact from Disney Cruise Line ship trial costs. Do you have Disney stock in your portfolio, or do you not trust the company? Let's talk about it in the comments. Good luck with your investments.